Halfway through 2025, the American economy has hit a major pothole. One dug by the very hands meant to pave the road to prosperity. The Trump administration's unpredictable policies, especially tariffs, have backfired, creating anxiety for families, workers, and businesses nationwide. The promises of a booming economy are now colliding with harsh economic data. Shrinking growth, nervous employers, and families tightening their belts. Let's break down how a trade war meant to protect jobs ended up doing the opposite, and why erratic policymaking has left millions bracing for impact. In early 2025, the U.S. economy shrank by 0.5%. This contraction, though it may seem small at first glance, sent shockwaves through financial markets and boardrooms across the country. Investors watched nervously as stock prices dipped and economic forecasts turned gloomy. The root cause? A sweeping new tariff policy introduced by the administration, aimed at protecting American industries, but with far-reaching, unintended consequences. The administration's tariff policy was designed to shield domestic manufacturers from foreign competition. However, the move quickly rippled through the economy, affecting not just big corporations but also small businesses and everyday consumers. Headlines blared warnings about rising costs and potential shortages, while policymakers insisted the measures were necessary for long-term growth. In anticipation of higher prices, businesses scrambled to import as many goods as possible before the tariffs took effect. Warehouses filled to capacity and ports saw a surge in activity as companies raced against the clock. Ironically, this import binge temporarily boosted economic activity, but it was a double-edged sword. The sudden spike was followed by a sharp drop, which ultimately slashed GDP and left supply chains in disarray. When the tariffs finally kicked in, imports plunged by a staggering 16% overnight. Ports that had been bustling with activity suddenly grew quiet, with containers piling up and cranes sitting idle. The abrupt change created chaos and unpredictability for businesses that rely on steady, reliable supply chains to keep their operations running smoothly. This volatility forced businesses into making irrational short-term decisions. Managers scrambled to adjust inventory, cut costs, and renegotiate contracts, often without a clear sense of what the future would hold. The uncertainty weakened the economy's foundation, making it harder for companies to plan, invest, and grow. Instead of protecting American jobs, the administration's strategy backfired. Factories closed their doors, assembly lines went quiet, and the trade deficit ballooned as exports struggled to keep pace with falling imports. The policy, intended as a shield, became a self-inflicted wound that hurt the very workers it was meant to help. The result was a nervous job market, with fewer opportunities and growing anxiety among workers. Consumers too felt the pinch, uncertain about prices, worried about layoffs, and hesitant to spend. The entire economy seemed to be holding its breath, waiting to see what would happen next. This initial shockwave set the stage for a series of economic troubles that would unfold in the months ahead, as the nation grappled with the consequences of a strategy that chose disruption over stability. The monthly jobs report, once a source of pride, now sparks anxiety. Job growth has slowed dramatically, down 67% from 2022 highs, and unemployment claims are at their highest since 2021. Factories, supposedly protected by tariffs, are losing jobs, and government cuts have only added to the pain. The Great Resignation has reversed. Workers are clinging to jobs, too afraid to seek better opportunities. This fear stifles wage growth and career progression, creating a stagnant labor market. Policy uncertainty and a crackdown on immigration have made hiring harder, especially in key sectors. The result? A vicious cycle of nervous businesses, anxious workers, and shrinking consumer spending. Consumer spending powers 70% of the economy, but right now, Americans are closing their wallets. The Consumer Confidence Index plunged to 93, far below expectations, as fears about jobs and tariffs mount. When people worry about job security, they delay big purchases, starving businesses of revenue. In early 2025, consumer spending grew just 0.5%, the weakest in years. Uncertainty over tariffs has paralyzed big-ticket purchases from cars to home renovations. Rising prices and a slowing job market have replaced optimism with caution. Until people feel secure, the economic engine will keep sputtering. Predictability is key for a stable economy, But the administration's approach has been anything but. Tariffs are imposed, suspended, and reimposed with dizzying speed, making long-term planning impossible for businesses. A renewed crackdown on immigration has created labor shortages in key industries. This policy whiplash has forced businesses to hoard cash and delay investment, stifling growth. The administration's love for dramatic, unpredictable moves may make headlines, but it's terrible for economic stability. The result is a corrosive fog of uncertainty, eroding confidence and grinding commerce to a halt. The economy needs a steady hand, not a roller coaster of impulsive decisions. The Federal Reserve finds itself in a precarious position, delicately balancing the needs of a slowing economy with the ever-present threat of rising inflation. On one hand, there's mounting pressure to cut interest rates in hopes of stimulating growth and providing relief to businesses and consumers feeling the pinch. On the other, lowering rates too soon could pour fuel on the fire of inflation, making everyday goods and services even more expensive for Americans already struggling with higher prices. The dilemma is stark. Should the Fed act to boost the economy, or should it hold steady to avoid making inflation worse? Every decision carries significant consequences, not just for Wall Street, but for Main Street as well. Recent tariffs have complicated the picture even further. These trade barriers have slowed economic activity, making it harder for American companies to export goods and for consumers to afford imports. At the same time, tariffs have pushed up prices on a wide range of products, from electronics to groceries, squeezing household budgets and raising costs for businesses. The result is a dangerous mix. Economic growth is stalling, but prices keep climbing, a classic recipe for stagflation, a scenario that haunts policymakers and economists alike. Since late 2024, the Federal Reserve has chosen to keep interest rates unchanged, adopting a wait-and-see approach. Officials are closely monitoring the impact of tariffs and other policy changes, hoping for clearer signals before making their next move. The uncertainty surrounding tariffs and their effect on prices has left the Fed in a holding pattern, reluctant to act without more data. This cautious stance reflects the complexity of the current economic environment, where every move is scrutinized by markets and the public alike. This indecision has only added to the sense of unease in financial markets and among business leaders. Investors are left guessing about the Fed's next steps, while companies delay hiring and investment decisions, unsure of what the future holds. The central bank's challenge is made even harder by unpredictable policy shifts from the White House. Sudden changes in trade policy or executive orders can upend economic forecasts overnight, forcing the Fed to react rather than lead. Traditionally, the Federal Reserve has been seen as a pillar of stability, guiding the economy through turbulent times with steady hands and clear communication. But now, it finds itself circling in a holding pattern, unable to move forward or back, waiting for the fog of uncertainty to lift. The question on everyone's mind, will the Fed eventually cut rates to spur growth, or will it be forced to hike them to contain inflation? The answer remains elusive and speculation runs rampant. The institution designed to provide guidance and confidence to the economy now finds itself grappling with the same anxieties as the public it serves. In these uncertain times, even the Federal Reserve is searching for answers, navigating a path through uncharted territory and hoping its next move will steady the ship. Amid the gloom, a small ray of hope appeared, a temporary de-escalation in the trade war with China. Both sides lowered tariffs, sparking a surge in durable goods orders, a rare bright spot. This shows how quickly business confidence can rebound when policy uncertainty eases. But the truce is fragile. Another policy reversal could plunge the economy back into turmoil. The lessened stability and predictability can unleash growth, but chaos keeps businesses wary. The economy's recovery depends on ending self-inflicted wounds and restoring confidence. For now, this glimmer of hope is just that, a brief break in a long, cold winter. The once booming housing market is cooling fast, another sign of spreading economic anxiety. Home prices fell for the first time in 2 years, and sales are slowing as buyers get cold feet. Rising jobless claims and uncertainty have sapped the optimism needed for big purchases like homes. More houses are sitting unsold, forcing sellers to lower prices. As demand weakens and supply rises, the wealth effect reverses. People feel poorer and spend less. The housing slowdown isn't just a real estate issue, it's a warning sign for the whole economy. Cracks are appearing in the foundations of consumer wealth and confidence. Despite all the bad news dominating headlines, the stock market is at a record high. But don't be fooled by the numbers flashing across your screen. It's easy to look at soaring stock prices and think the economy is thriving, but the reality for millions of Americans tells a very different story. The market's performance is not a reflection of everyday life, and it certainly isn't a substitute for a steady paycheck or job security. While investors celebrate, many families are left wondering how they'll pay next month's rent or put food on the table. The stock market is not your paycheck, and it never has been. The market is betting this is a temporary blip, a momentary setback that will soon pass. But that's cold comfort to those losing jobs or struggling to make ends meet. For the millions facing layoffs, reduced hours, or mounting bills, Wall Street's optimism feels distant and out of touch. The pain of unemployment and financial insecurity is real, and it can't be erased by a bullish market. While some see opportunity in rising stocks, others see only uncertainty and fear about what tomorrow will bring. The disconnect between Wall Street and Main Street has never been clearer. In the heart of the financial district, fortunes are made in seconds. But on Main Street, small businesses are closing their doors and families are tightening their belts. The gap between those who profit from market swings and those who bear the brunt of economic downturns is growing wider every day. It's a tale of two economies, one that rewards speculation and another that punishes hard work with uncertainty. Big disruptive policy changes have real, painful consequences for ordinary families. When decisions are made in boardrooms or government chambers, it's everyday people who feel the impact first. Lost jobs, rising costs, and shrinking opportunities hit hardest at the kitchen table, not the trading floor. For many, the stress and anxiety of making ends meet is a daily reality, not just a headline. Trade wars and unpredictability create chaos, not strength. When tariffs rise and global supply chains are disrupted, it's workers and small businesses who pay the price. Factories go quiet, exports slow, and communities dependent on stable jobs are left in limbo. The uncertainty ripples through every corner of the economy, undermining confidence and making it harder for families to plan for the future. The true measure of economic health isn't found in corporate profits or stock indexes. It's measured by the security and opportunity of everyday Americans, the ability to find a good job, support a family, and build a better future. When workers thrive, when small businesses grow, when families feel secure, that's when the economy is truly strong. We must remember that prosperity should be shared, not hoarded at the top. The wake-up call is here. Every morning, as Americans rise to face new challenges, the gap between market headlines and real life becomes harder to ignore. It's time to ask tough questions about who the economy is really working for, and who's being left behind. The question is, will our leaders finally respond to the needs of ordinary people, or will they just hit snooze and let the rest of us deal with the fallout? The stakes have never been higher, and the choice is ours to demand an economy that works for everyone,